let's take a look at section 35A, the withholding tax on immovable property section. Now, remember, we have been looking at non-residents, and only non-residents are subject to these withholding taxes. So this is the same case here. So we're looking at a non-resident who is receiving something from a source in South Africa. In this case, a non-resident who is selling fixed property which is from a South African source. And you'll recall that section 9.2J tells us that immovable property which is situated in South Africa is considered from a South African source. So if a non-resident, so a person from America, owns a property in Cape Town and he or she sells it, then that will be subject to withholding tax in terms of section 35 capital A. Now, all of the withholding taxes we've been looking at are final taxes. So if you, for example, think of withholding taxes on interest, it works out that when there's withholding tax payable, the interest is fully exempt from normal tax, or when it's not exempt from normal tax, then there's probably no withholding tax. They work in such a way that they actually talk to each other. But here we have a situation where this is not considered a final tax. Now, basically what happens here is if you are a non-resident and you've sold property, there would have been withholding tax on the amount that you received for selling the property. If you then go and you do your proper South African tax return, then that withholding tax that you've paid is considered a prepaid tax. So basically, you'll calculate what is the amount that you owe to SARS, and then the withholding tax will be deducted from that. So either SARS will refund you or you'll have to pay in. But it is possible that you can actually be refunded a certain amount, and that is why this section exists. Alright, so we'll talk about that in a second a little bit more. This withholding tax that is withheld must be paid across to SARS either on 14 days or on 28 days, and it depends on the purchaser, so the person who is buying it from the non-resident. If the person who is buying it is a resident, it's 14 days after the amount is being paid and withheld, and for the non-resident, if the purchase is non-resident, it's 28 days. Right, there are some penalties at 10% of the amount of the withholding tax, and there will be interest on that if you are the purchaser. So if you buy from a non-resident and you don't withhold it, and you don't pay it across to SARS, there will be penalties involved. Okay, not as common to see for us in an exam though. But how do we calculate this? So we're looking at the seller, right? Remember, the seller must be a non-resident. So if the seller is a natural person, it's 7.5%. Company, 10%, and a trust, 15%. This section 35A withholding taxes, when do we not have to calculate it? If the purchaser will not pay more than 2 million rand. So in other words, if this immovable property is being sold for 2 million or less. And also please note that if you pay a deposit, so you go to the non-resident and say, I want to buy your property, and he says, give me a 10% deposit, and you pay that, that is an amount you've now paid to the seller. But you do not need to withhold withholding tax on that yet, because it's just a deposit. Remember, you as the purchaser have the responsibility to pay it across. So every time you pay, you must withhold some of it for SARS. So if you pay a deposit, you don't have to withhold it. Alright, then we spoke about it not being a final tax. Now basically, what this means is the following. Okay, so Mr. A is a non-resident, sells house in Cape Town for 1 million. Sorry, not 1 million, 10 million. Right, and I'm just going to say, assume the base cost of this house is 2 million. Alright, well, I don't want you to focus too much here on the amounts. I want you to focus on the principle. We are now talking about this section over here. When is it not a final tax, and what does it mean? So first I want to just discuss to you what it means for it to be a final tax and to not be a final tax. Now, if you split your page into two parts again, or your book, page 1, page 2, not rather split your page, Remember guys, make it nice and clear always, and normal tax. Alright. This withholding tax, if this non-residence Mr. A, the withholding tax under section 35A will be 10 million times 7.5%, 750,000. Okay, now this normal tax calculation that we perform, remember what we're actually doing is we're completing a tax return. Now, if your non-resident does this, it will not be a final tax, but if he does not do it, it will be. So let's first just talk about, let's just do the calculation. So again guys, I'm not going to actually even complete all the amounts, I just want you to focus on it. So what you'll now do is this will now be a sale of property. Don't focus too much on the amounts. Proceeds will be the 10 million. Always the amount, the full amount, not less withholding tax. Base cost 2 million. Gives us a capital gain of 8 million. Again, if you haven't stayed at it, don't worry. Right, 8 million rands. This capital gain, you will now do all sorts of things with. You will deduct some annual exclusions from it and so on, and you'll multiply it by some percentages. Basically what I want you to just see, here's your rands column where we do our tax calculation. Eventually that amount's going to make it in. Right, you're going to calculate taxable income. On that, tax per the tax tables, you're going to deduct rebates from that. Primary, secondary, things like medical rebates, all of the, whatever rebates are, right? It's just, for now, you're going to calculate your net normal tax. And from this, there will be a prepaid tax deduction. Now, this what I've done here is applicable to every single person, resident, non-residents, that perform tax calculations in South Africa. This is how we do it. Now, that's 750,000 rands over there. If the seller, so the non-resident, completes a tax return within 12 months after the end of the year of assessment, so within the 12 months after the tax year ended, if the non-resident does this calculation that I've just done, then this 750,000 rands is not a final tax, and it will be allowed to be deducted here. Now, if your net normal tax over there that you've calculated is 600,000, for example, this means SARS will have to give you a refund. It can obviously also be more, right? It can obviously also be more, 800,000, and then this person will have to pay in to SARS. But very often when this is the situation, this is when people don't do it. I'm not saying it's correct, but that's when they don't do it, and that is why we have this withholding tax, so we can get a big chunk of it. If you do not complete your tax return within 12 months, so 12 months have gone by and you still haven't done it, if you then do it, or if you never do it, it doesn't matter, you will not be allowed to do that deduction over there. And typically, then this whole calculation wouldn't have been performed if you haven't done it. If you do it, but more than 12 months later, then you'll do this whole calculation here, but you can't get that deduction. And that is basically it for withholding tax in terms of section 35A. And there are just some steps over here to follow if you want to just see it in sequence.